Wow, that big thud you just heard, that was the sound of a very weak market starting off the year of 2022. It is Dennis Wilburn, the active trend trader. Our stock pickers found two stocks this weekend that could be setting up in the short term for some very strong moves, even though the market's kind of weak. And then you want to watch this video all the way to the end, because at the end, I'm going to be talking to you about how you can modify your practice routine to make you a better stock trader. But first, I put up a link up in that corner up there that will basically show you how you can get a hold of the best watch list every week, called the Power Rank Elite Watch List. You want to check it out and sign up and get that watch list in your hand before you do your review every week. Let's get into today's session. Hey, good afternoon, everybody. This is Dennis Wilburn, the active trend trader. Welcome to How to Make Money Trading Stocks and Options. This is our first session for 2022. And we're really glad to be back here. We took a couple of weeks off. I want to welcome Steve and Neil. We've got a couple of great stocks to share with you today. Also, let me know what you think about this. I am basically refining our process so that we can basically get in and out within 15 minutes. That is the objective. And so I've cut a couple of things out, and which is great, because we're going to spend more time focusing on what we're trading, suggestions. Those are not recommendations, but we're just, things that we're looking at. Again, I've got a couple of great stocks today, and we've got an absolutely fantastic tip that you're going to want to stay on to the end to hear that tip. So let's go ahead. Wealth creation is a derivative of mechanically addressing opportunity and addressing opportunity. That's something that was quoted by Tom Sosnoff, a very great quote, and I really remember that, because I like to trade what I like to trade, a mechanical trend following or swing trading system. Remember that all the materials we do present are for trading purposes. Traders should always paper trade any new method prior to the risk of their own personal capital. So just a quick update. We are on January 7th. I took the notes, but I'm showing the chart of where I wound up in 2021. So I finished up about 33% for the year. My target, of course, is 40%. But given the conditions of last year, I'll take it, and then we'll build on top of that. I'm really pleased. It was my 10th year of beating the S&P. And our average return is a little bit over 36%. Here's where we're starting off the new year. Look at all that red that's there already. And so, are we concerned? No. The reason why I'm not concerned is because, well, for one thing, my system has an edge. And when your system has an edge, you're going to have winners and losers and all that kind of stuff. And sometimes you get your losers all up front. And but again, we're still outpacing the market in the S&P. That's what I trigger off of. So let's go ahead and jump in. I'm going to jump in. Here's the essence of what we're going to do. I'm going to do a real quick market review. Then we'll get into the stocks. I've got a question for Steve and Neil concerning what they're doing differently in 2021. Compared to from what in 22 compared to what they were doing in 2021. So in other words, what refinements have they made in their system? So, but first of all, let's go ahead and jump over and see what the indexers are doing. As you can see, a couple of things. One of the things I spent my time doing over the holiday period is just reviewing some things from Mark Minervini, and also what triggers you in and out of a trade, and how do you protect. And one of the things that I've implemented for this year for our active trend trading and AutoPilot trading members is the concept of doing backstops. In other words, if you're up profitable 5, 6, 7, 10%, there's no reason to let your profits, especially when the market's the way it is right now, when the market is, there's no reason to let your profits go to zero or even go all the way down to your the stop that you have in place if you have a reason to backstop it. And so we, in other words, don't take a 12.5%, trailing stop if you have a technical reason to go ahead and jump out of a stock, jump out of the position for a nice profit. So that's something to learn. So here we got the S&P. S&P, what I'm seeing is basically we broke out last week, and then we showed the first couple of days of this week going on. We came back and retested the breakout, and then the market kind of went fizzle, fizzle, fizzle. We have now broken back down below the breakout area, but we're finding some support there at the 50-day moving average. Will that support last? I don't know, but we will take a look at some of the things that just keep in mind. One, the momentum is shifted down. We have the TS, the market forecast, longer term green line breaking below the 80 line. That often means that there's going to be some additional pullback. At the same time, though, we have some really nice levels of support from previous time where that could catch the down, the drop and still be within the confines of a really nice uptrend. But as Steve said, as we finish up this week, what are we looking at? We're looking at a bearish engulfing on the weekly, and we're hanging right there at the 50. So that's what I've got on the S&P. Excuse me. Let's take a look over here at the NASDAQ, or the substitute for the NASDAQ, the Qs. Now, a little bit different story here. We are falling down all the way to past support. Price action fell and broke below in a hard way, broke below the 50. So that could set it in on a weekly chart. What are we looking at? I mean, it's not a full-blown evening star, but it certainly is a bearish kind of a drop down here to the downside. It appears as if we're going to be closing below the 100-day moving average. We have support at 377. The support at 377 breaks. Watch out, 200-day moving average. I have no reason to want to trade the NASDAQ to the upside at this point. Market all the and the other thing I basically picked up on, over the week, over the holiday period, is it really pays you, especially in a very turbulent market. Wait for the dadgum momentum to shift before you make a decision to, or basically let that be your trigger to then start working into a position. IWM's hanging up pretty well, but again, it's dropped below the all the moving averages. And as you note here, note what's happened. The 50-day moving average is now dropping down to the downside. The 8 has crossed back below the 20. So if we break below today's lows or the lows from yesterday at the 215 level, then watch for our retest back down to 210. I mean, that's basically the bottom line. And then, so that's my zone of value down here at the 210 level if I take out today's low or yesterday's low. Market, again, momentum shifting down, and I need to wait until I have a signal to jump on. The weekly, as you can see, TSI has also come back and bumped up close to the zero line, but now it's reversing back down. So it would not surprise me to see price action go back and test the lows of this channel back at the 209, 210 level. That's what I've got on the indexes, guys. Comments? Where did Neil go?
I don't know.
Okay.
I pretty much agree. I agree with you, but I think it's been a tough market since early November. And what I don't really like is the NASDAQ has weakened a lot. The tech area has weakened. And then in a good market, in a easy to trade market, tech leads. And
right.
until tech gets stronger, I'm not interested in trading. So you'll notice the last show we had, I didn't have a pick, and I don't have a pick today. I mean, I see a lot of things selling off. I think there'll be nice trades coming in the future, but at this point in time, until we resolve the interest rate situation, until we know clearer what the Fed is going to do, we're probably going to have a choppy market, and I choose not to trade.
Okay.
I need cash.
Anil, what about you?
I agree. At the NASDAQ, my system is saying, gave me a sell signal. Others are barely holding.
Yeah.
I'm changing the strategy where if my system tells me to buy something outside Ken Slim, outside NASDAQ, I'm going to do it.
Okay. That's fair. You know, that's very interesting. I hope everybody's picking up on what both Steve and Anil are saying, is that they basically, they are saying they're trading their rules. They're trading, what gets them in and gets them out of the market. And also a very important point that Steve brings up, what tells them to stand aside and not trade. Because guess what? You don't lose if you don't trade.
Yeah.
And so, okay, hey, let's go ahead and take a look at the stocks that we have. And now Steve had no selection today. As in his reason that he just gave, Anil has cap. I kind of teased him a little bit when he sent this to me. And he responded back. I said, I hadn't heard that name in a long time. And he came back and says, well, it's an oldie but a goodie. And when you look at the price action and the volume down here, yeah, it's on a tear. So what's up with it, Anil? And did you already buy in?
Yeah, I bought it yesterday at, what's the point? I don't have in front of me, just a couple of dollars less than this one.
Okay. So you bought in here.
Yeah.
Okay.
And the reason is my system picked out on a weekly chart, it gave me a clear buy signal earlier this week.
Okay.
So I said, okay, I'm going to follow the system, get it. And that's the reason.
Yeah. So, yeah.
Looked at accumulation distribution and up-down volume ratio, and it all fits within my requirement.
Yeah. And you've got a really nice, you've got a nice cushion there because the breakout area right there is about 2.6% below where you bought it. And so even if you go with a 5% or maybe a 4% stop loss, it still gives you plenty of room to let the trade run for you. I like it.
Right.
So
a great pick.
I like it. So let's see.
And I like it particularly. It's a defensive. I consider it a defensive stock, looking strong. I think it's in sync with what I think the market situation is right now. So I like the pick. Yeah.
And so, okay, guys, and the question I had for both Steve and Anil, and guys, keep your responses really, really brief. What one thing from your analysis of how you traded in 2021, what one thing are you modifying or refining in the way you're going to be trading in 2022? Anil, go ahead.
I think the question I asked myself after looking at strange, mentioned Mark Minervini a few minutes ago, he made more than 200% in spite of a choppy market. So I said, why can't I do that? So I'm going to study his book this week from cover to cover and figure it out and see what I can learn and implement.
Yeah. And so I like it.
Yeah.
Steve.
For me, I'm doing two things. I'm trying to be more cognizant of the market environment, and it's only when the market is in clear has a clear trend is what I'm going to try to trade more in sync with the market. And I looking back on it since November, I think we've gone sideways. We look like we had a breakout starting, but we've pulled back in. it tells me the market is uncertain, and until we develop some clarity, I will not deploy my cash.
Okay, I love it. So, and Ian, I did get your comment on the chat, VLUE. We'll take a look at that as a chart if we have time in this session. My takeaway from 2021 is because of the choppiness of last year, I let a few things and not get away from me. I followed my rules, but there was a lot of whipsaw, and I would take a lot of round trips. I'd get into a stock where technically it should have stopped and rebounded, and it just blew past it and stopped. What I'm taking away, and similar to what Anil said, is I got in and did some review of Mark Minervini and how he approaches it, because you have to ask the question, what is he doing differently to gain 200+% in a choppy, crappy, hard to trade market? And one of the things is he takes his profits very quickly. And also he does a couple of things like backstopping his profits so that he doesn't, if he has a 10% stop loss and the market starts to go against him, he'll backstop it. He'll bring his stop loss up to 4% or 3%, especially if it's already become a profitable trade. So for me, my takeaway from 2000 is that be more patient and wait. And my big one is, so going into 2022 is wait for the momentum to shift. That's my biggie. Wait for the momentum to shift. And then once it's shifted, then that's my green light to go ahead and take bullish trades. And as you see on a lot of these, the momentum hasn't shifted. I don't have a green light. Yeah. So, okay, that's it. So let's see what else we got. The tip for today, a tip for this week is basically take the time to, before going into the new year, take the time to develop a clear mental picture of your proper entries and your proper exit points and what the pattern looks like according to your written trading rules. In other words, learn them and then rehearse them so you know what you're looking for when you're looking at a chart. And it'll help you be more patient. And so, hey, if you've, hey, just remember, hey, if you will, I'll get back to that in a second. Here's my pick. You ready for this? You're gonna absolutely crack up. Or I may crack up. Is that it? That's it. Here's my pick. NVAX. This is purely a momentum trade based on the NVAX is, of course, a virus vaccine company that basically has developed a vaccine for the coronavirus. It is more of a traditional type virus. So there are those who have some issues with the existing shots. This may be something that would be more acceptable of taking and getting a shot with. They just filed at the end of December for the final filing with FDA, and they're expected to go in for their emergency use authorization prior to the end of January. So it's a really nice looking pattern. We have a hammer followed by a bullish engulfing. If we follow up where we are right now, we haven't shifted totally momentum-wise, but it's really darn close. Now, I'm not taking a trade on this at this moment, but if I look up here at the weekly charts, it's also, where's it testing? Back at a former level of support. So there is a lot of option, going, buying on this down here at the 125 level and up here at the 170 level. What's interesting is this 170, I think that's an upside target for it. If approved, the institutional one came out with a guidance of about 315 on the stock. So again, purely a momentum move, but that's my pick for this week. What do you think, guys?
I like the chart. It just has to play out.
Yep.
I agree. I agree with your analysis.
Yeah, I hope it's bottomed and it's going to turn around. Let's see what happens.
Well,
Let's see what.
And if you're wrong, I think you'll know pretty quickly. So.
Oh yeah, yeah. And again, I'm not getting in it yet simply because I don't have my green light. Because if I said, hey, I'm going to jump in this right here, guys, what I just told you about waiting for the momentum shift, I would have been lying to you, and I'm not going to do that. So, hey, let's take a real quick look at
So, Dennis, when will you get in this?
What I'll do, Anil, is I will wait for my TSI to cross.
Okay.
Here, and then that will probably put us up into, if I get a large candle here, it will be probably in this area here, or if I get a breakout and a gap up, I'll go ahead and just take the gap up move with a stop just slightly below today's high.
Gotcha. Okay.
Now, if I get a retest where it's hammering back down here somewhere between 125 and 120, and I have the TSI crossing over, a momentum shift, that's where I would want to go ahead and I could also jump in there. So I like it about somewhere between 120. Well, I wrote it down here. I like it between 126 and 126.50.
Gotcha. Thank you.
And it's at 126.50. I will adjust what I just said and say I like it better down at a 125. The 126 to 126.50 was based on if today was a full-blown large green candle, and right now it's not. So
it was earlier, though.
It was earlier when I looked at it.
Yep.
So I am not familiar with VL. Okay. Yeah. And I got to tell you, I am not familiar with this at all. So I'll flash the, Steve or Anil, are you familiar with VL?
Is that an emerging markets play? I think it is, right?
I don't know.
Or is it maybe value? It's a value play on the market, maybe?
Yeah.
Yeah, so it makes sense. I think with the market being scary, being uncertain,
yeah,
I think there's a move toward value types. If this is a value play, and I think it is, but I'm not sure.
And yes, it is.
If it's a value sector play, I think it's a good trade.
Okay.
For this uncertain time. Yeah.
It definitely shows if things are shifting over to value. That started back when just before Christmas. Right. And so, Ian was just making a point that it's a macro type thing.
Yeah.
So I like it. So, okay, let's run ahead and just get, hey, start your weekly review again with how to make money trading stocks. We do a market review. We do a stock pick. We do all of this. And I got a simple ask for you. Just please refer us and also recommend us to your friends who also like to trade. We'd love to have more people coming in on the Friday webinar. And again, we didn't quite make 15 minutes, but we were close. So for 2022, my two big words for 2022 for my trading is going to be patience and persistence. And so aloha, trade well, prosper, happy New Year, or haole
makihiki, everyone.
Haole makihiki ho. And Anil, happy New Year. Steve, happy New Year.
Likewise.
Happy New Year, and thank you.
And it's good to be back together. And so thank you very much, folks. We'll look forward to seeing you next week.